In this video, we're going to talk about Nano Dimension, trading under the ticker symbol NNDM. Before today's video begins, if you'd like to see more stock analysis videos, please like, comment, and subscribe to my channel. Nano Dimension has been a hot stock to pick since late 2020, and since then, a lot of investors have been wondering whether it is time to jump back in. In this video, we will talk about whether the stock has a bright future ahead of it, and when it is a good timing to enter the stock. One of the reasons the stock is so popular is because of the backing of Cathie Wood. Two of her funds have entered in positions with Nano Dimension, and the cost basis is above where the price is currently now. There were also additional purchases in late August when the stock was continuing to slog lower. Those purchases do make retail investors wonder whether now is a good moment to buy, and we will come to that in a second. The company itself is trading at a fairly constant volume on a daily basis, between 3 to 5 million shares for the most part, and sometimes increasing up to 10 million shares. The bottom line is, right now, the stock is slowly grinding to lower levels, even if there is no obvious reasons, and the trade volume is not necessarily picking up either. What this means is that the fundamentals of the company either don't hold that much weight right now, or is not necessarily perceived as positive, or it simply has already priced in. Personally, I think that it's the first scenario. I don't think that the technology is getting valued sufficiently by the investors because it doesn't, not necessarily because it doesn't have value, but because it has been priced in already. The reason why Nano Dimension is trading at that level right now is because the market assumes that its technology will be highly valuable in the future. Like, that is already assumed to be the case. There are two catalysts that need to happen in order to push the stock to higher places. The first one is if the company managed to score several major contracts and began generating a lot of operating cash. Recently, there have been signs that the company began to go down that road, and this could be something that the stock can rely on in the future. The second catalyst is if the company manages to either develop some significant new technology that can advance its capacities, or if the company buys another startup with complementary technologies that can enhance its existing ones. My recommendation is to buy Nano Dimension shares now, before the catalysts are felt by the market, while keep in mind that the stock is probably going to keep grinding lower in the meantime. This means that we need to control the risk on how much we wish to put into Nano Dimension. In this case, given the company's profile and the market sentiment, I would suggest a maximum exposure of 5% of your portfolio. Looking at the current environment, I think that we got to be careful in general about having exposures in equity market, especially in growth stock market, because the financial markets have been predicted to eventually go through major recessions and pullbacks for more than a decade at this point. And frankly, after the debacle and the real world economy of 2020, I wonder why that hasn't happened yet. Possibly because everyone is pouring their money in the stock market looking for a safe haven. After the QE years and the drastic increase in asset prices and the corresponding collapse in their yields, we got to remember that the market isn't a mirror on how the economy works or how is it doing, because otherwise the market would have been sideways ever since 2008 almost. And then 2020, we saw another big push in asset prices, and this time not just for the blue chips, but also the growth stocks. There are, generally speaking, two explanations. The first one is that a lot of people saw the upcoming Armageddon and they wanted to put their money into some sort of safe haven sectors, such as Tesla. Like, I think that a typical example of what happened in 2020 was that people feared that their stocks would lose a lot of money in other sectors, and they decided to put their money in something like EVs. And this is why EV stocks were so hot in 2020. The second phenomenon is the increase of tensions around the world. And the more tensions there are, the more money there tends to be flowing to the US and North America in general, because it is still perceived as a safe haven for capital from different countries, especially those that are currently seeing turmoil or social unrests. What this means for the market is that the degree of uncertainty will increase over the next month and years, especially as the expectation for a recession is building up after the party in 2020 and the recent announcements from US Federal Reserves about a possibility of recession, as well as the economic difficulties accumulating from around the world, namely from Asia, do make me feel that it's important to keep those speculative plays at a reasonable level. Now, Lucid is less of a speculative play nowadays, but we gotta stay vigilant about the upcoming headwinds that can come down to us. So this is why I would say that better to keep your position at 5% now and to maybe see if there is a huge negative catalyst later on to scoop the bottom. Long term, I think that Lucid has a bright future ahead of it. This is why any sort of sudden dip to the lower is an opportunity to profit from them. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.